Hi, let's do a recap for the week of February 10th to the 14th. So we had two stocks in play, Carvana and Roblox. And we also tried to make a play for NVIDIA, but selling the call contract did not go through at the price that we wanted. We were that close. If we had sold the call contract, we would have come out making money on the premium for NVIDIA. So anyways, for Carvana, we sold a call contract on Tuesday for a $280 strike price that expires on February 14th, Friday. And similar, Roblox, we also entered a covered call selling a call contract at $58 strike price, expiring also on February 14th. And we had to purchase the shares because it was covered call and we didn't have them before. So for Carvana, I picked that because it's a relatively large market cap in its sector compared to a company like CarMax. The business model is a little bit different. Yeah, CarMax has more revenue, but Carvana has a different kind of business model. They're more online focused and they have different operating costs. So I thought that would be a good stock to pick, especially its implied volatility was pretty decent. It was over 0.8 if I recall, and that implies that the premium is going to be a little bit more relatively juicy for us to make money on. And we were looking good for that part, for the premium, but on Friday it actually shot through the strike price and it got into the money and we had to close. So we didn't make money on the premium, but for people who care about the appreciation of the stock and they're holding it in a covered call situation, then that would have been profitable. But in this series of videos, I really want to demonstrate to you how to make money off the premium, and then depending on your scenario, whether you do a covered call or a naked call, that's up to you. So yeah, that was looking good until the end. And then Roblox, yeah, we played it after previous week. It had an earnings release, and the bookings were, the bookings were a little bit disappointing, and so it dropped, and it did bounce a little bit on Monday, and then from there we entered, hoping for more sideways action on that one, and we did get that. So we did make a little bit of money from the premium and also from the appreciation of the stock a little bit for people who care about owning the stock at the same time. And another note is, like, you know, when you're doing weekly contracts for covered calls, it's really hard to predict, you know, or to predict and count on for profitability of the stock, whether it's going up or down, you know. So I mean, it can be done, but it's a little bit trickier. And so it's really up to you to decide if you want to do a naked or a covered call. But for the simplicity of this video, we're doing covered calls, and of course we're calculating what it would have been if you did a naked call. So anyways, we were able to make money off the Roblox premium there, so that was nice. And then NVIDIA, yeah, we tried to make a run for that one, but selling the call contract for 139 strike price at 40 cents per contract did not happen. There was a little bit of lag on my part on getting the contract order right, and because of that lag, the market price fell, and we couldn't get the order to go through. If we had, it closed at about 138 and change below the 139 strike price, and we would have collected on the premium on that. This is the Thinkorswim platform where you can look at the trade history for this week, and it's a little bit messy. So I made a spreadsheet to quickly recap this past week from February 10th to 14th. The two stocks that were in play was Carvana and Roblox. So by buying the shares in order to create a covered call, we bought at 272 and change and 65 and change for 100 and 200 shares. At the end, both stocks went higher. So when we sold it, we were at a profit of 1,256 and 210, which gave us a total of 1,466. So you would make money if that should matter on the ownership of the stock. But, you know, covered calls, like I said, you know, sometimes you're more in it for the long term, and such short-term gains may not be meaningful to you. Now for the options that we sold out to a buyer and trying to make money off the premium, Carvana, we sold at $1.99, Roblox at 0.38 for two contracts,
And we were looking good for Carvana up until the end of the week, where on Friday it did surge after the opening bell to the point where it was in the money. And I did close the contract out before the end of the bell. I mean, you could let it ride into the end of trading, and you would just get assigned and sell off the shares, and it made maybe a very small difference. But more importantly, is pretty well we were at a loss for this one. We're minus 306. So instead of making money, which we were hoping for, we did lose money on this one. Roblox, which was, had a lower implied volatility and it didn't surge on us after its earnings in the previous week, we did make $66 on this one. So the net for the trying to make money off the call option premiums is negative 240. And for both the ownership of the stock and call options, this is our net for the week. We're up $1,226. But if you were selling a naked call options for both Carvana and Roblox, it would be down $240.
All right, game plan for this upcoming week. I haven't looked at everything yet, but maybe we can make a play on Carvana again. They do have earnings release on the 19th, so the premiums are very juicy, and maybe we can sell a contract well above where the price sits now. So maybe we can sell it at 320 or whatever, and it still be a decent amount of premium to collect it on that. And then we'll think about NVIDIA. Maybe we can also play on NVIDIA, since their earnings is, I believe, the 25th, and they've been trending up in this past week. So maybe it's leveling off a little bit, and we can get maybe some slight uptick or some sideways action and collect on the premium on this one. So that's my thinking right now, but I'll update you on the next video about that.